Hello students, so in the series of multiple choice questions, here I am presenting with multiple choice questions for income statement and statement of financial position, subject bookkeeping. So students, in this video you will see number of multiple choice questions for this topic, income statement and statement of financial position, which will definitely help you to understand the concepts from this topic. So before turning to multiple choice questions, let's study format for both. So here you can see on the screen income statement. See, you all know one of the reasons why bookkeeping records may be kept. So one reason is to calculate profit earned by the business or the losses incurred by it. So an income statement is prepared at the end of the trading period to determine profit or loss made by the business. So here you can see format for income statement. See, it is starting with sales. You can see over here on the screen. See, this is vertical statement. So sales, we deduct sales written. Sales written, other name is return inward. So when we deduct sales written from sales, we get net sales. From net sales, we deduct cost of goods sold. So cost of goods sold is, you can find out cost of goods sold by formula opening stock or opening inventory, add purchases, carriage inward or any other direct expenses related to purchases, less purchase return. So you get cost of goods available for sale, less closing stock or closing inventory. So the cost of goods sold figure, when you deduct from the net sales above, you get gross profit. Add other income other than sale, like commission received, discount received. Then less expenses like salaries, rent, stationery, general expenses, lighting expenses, carriage outward. So at the end you get profit or loss for the year. So this is how vertical statement is prepared. After vertical statement, you can see on the screen format for statement of financial position. See, it refers to the statement summarizing the financial position of a business on a given date. It is constructed from the balances in the trial balance remaining unused after the construction of the income statement. It shows assets, liabilities and capital of the business as at a certain date and not a period. Not for a period. So only, see, here we write above a statement of financial position as at, and in income statement we write above an income statement for the year ending. So here a statement of financial position, see, it starts with asset. You can see on the screen assets, that is all non-current asset, or we call it as fixed asset, assets which have long life. They stay in a business for a long time. For example, land, building, plant and machinery, furniture. Then there are current assets. These are the assets which are likely to be converted into cash before the end of the current year, like inventory, account receivable, that is debtors, cash at bank, cash in hand. So when we make total of both, we get total assets. The second part in the SFP, statement of financial position, is capital and liabilities. In the capital, you start with capital which is given in the beginning, capital at start. You add profit for the year. If there is loss, you deduct loss for the year, less drawing. So you get net capital at the end. And then non-current liabilities like bank loan, loan from somebody. Then current liabilities like account payable, that is sundry creditors, bank overdraft and so on. So when we add this both, we get total capital and liabilities. So the amount in the beginning, total assets should match with the total capital and liabilities. So this is the format for both. Now we will start with multiple choice questions one by one. So students, please give proper attention to the video. Definitely it will help you. And multiple choice question. With the multiple choice question, It is easy to understand concept, even it is useful for exam point of view, where more than 10 marks are allotted for multiple choice question. So number 1, first, a statement prepared at the end of the trading period to ascertain profit or loss. See, that is the reason first I explained you format. So now it will be easy for you to give answer. A statement which is prepared at the end of the trading period to ascertain profit or loss. So here from the options given you can see answer income statement is correct. So students, now wherever I feel like there is need of giving explanation, I will give you explanation. And what I will suggest you can pause video each time. You can see the which are the options given. Just think over that which will be answer and then check answer with video. Okay. So here answer is income statement which is prepared to find out profit or loss. Second one, goods bought for resale. Goods bought for resale are referred to as. Goods bought for resale are referred to as. So here option you can see income, purchases, sales and purchase return. So when the goods are purchased for resale, it is known as purchases. Okay, we have seen in income statement we take purchases. See, purchase is the cost of buying goods for the purpose of sell in the ordinary course of business and not for the purpose of using it in the business. It is therefore a kind of expenses and hence it is included in the income statement within the cost of goods sold. Okay. So the goods bought for resale are referred to as purchases. Number 3, the success of a business is clearly measured by. So success of business is clearly measured by. So the answer is net profit. Okay. The success of any business we can clearly measure by net profit. Fourth one, when the sales is bigger, when the sale figure is bigger than cost of goods sold, then we have. So this also we saw in the format. See, when the sales amount is bigger than the cost of goods sold, so of course it is, what will be? It is gross profit. Answer is gross profit, that is option number C. See, gross profit is the excess of sales over the cost of goods sold. So it is calculated by taking sales minus cost of goods sold. So the formula for gross profit is net sales minus cost of goods sold. So if the amount of sale is bigger than the cost of goods sold, so we can say that there is a gross profit. So fifth one now, when the cost of goods sold is bigger than the sales, then we have. So it is opposite of what we have seen in the transaction number 4 about gross profit. So here it is when cost is more than the sales. Obviously, if the cost is more than the sales, so here we can say it is gross loss. So answer is gross loss. See, gross loss is the excess of the cost of goods sold over sales. It is expressed as the cost of goods sold minus sales. Okay, so gross loss is cost of goods sold minus sales. Number 6, when the expenses exceed the income, when the expenses exceed the income, then it is said to be net loss. See, after gross profit, in the gross profit we add income and then we deduct expenses. Okay, so while deducting expenses, if that expenses amount is more than the income amount, for example, suppose expenses are 10,000, okay, and income is only 8,000, then what we will say? That there is a net loss. If expenses are more than income, it is net loss. Point number 7, cost of sales is equal to. So cost of sales. See, cost of sales means what? Cost of goods sold. So we have seen it before that cost of goods sold formula is opening stock plus net purchases less closing stock, and net purchases means purchase plus wages plus carriage inward less return outward. See, cost of sales, other name is cost of goods sold. It is the cost of goods or services which have been sold. So cost of goods sold and cost of sales are one and the same. So here you can see answer is D, because the other options are number 1 is sales less cost of sales. Now how cost of sales is equal to sales minus cost of sales? Okay, sales minus cost of sales is gross profit. Option number B is given purchases plus opening stock less sale. It is also incorrect. Then gross profit minus income. It is also wrong, because gross profit we get after deducting closing stock. Okay, gross profit we get means after deducting closing stock, mean to say when we find out with the formula we get cost of goods sold and then we deduct from sales. So here cost of sale is equal to opening stock plus purchases less closing stock. Point number 8. See, now here one question is given figure showing sales 28,500, opening stock figure is given, closing stock, carriage inward, purchase. So you are asked to see what is the amount of cost of goods sold. So as just we have seen the formula. So here you can see, if we put figures in formula, what is the amount of opening stock is given? Amount of opening stock is 4690 plus purchases 21,360 plus carriage inward is 570 less closing stock is 7240. So if you calculate this equation, you will get answer 19380, 19380. So this is answer for cost of goods sold. Here remember students, the sales figure is given just to confuse. Okay, while finding out cost of goods sold, you are not considering amount of sale. Then next one, 9th, all the following affect owner's equity except. See, owner's equity refers to owner's capital invested in the business. Owner's capital invested in the business. So we have seen this in statement of financial position. So now here you can see all the following which affect owner's equity except. So see, owner's equity equal to total assets minus total liability, or we can express it as capital plus net profit less drawing. So here you can see, as well as if there is additional capital we add it. So drawing, it affect owner's equity. Net profit, that also affect owner's equity. Additional capital also we add. So what will be the answer for all the following affect owner's equity except, it is given except. So all other 3 points, drawing, net profit and additional capital, it affect owner's equity except stock. So answer is stock. Next, point number 10, the formula for gross profit. The formula for gross profit is, so see, gross profit we saw, it is the excess of sales over cost of goods sold. The formula, so for the answer here you can see, what is the answer? Number D, sales less cost of goods sold. So answer is Formula for gross profit, remember, sales less cost of goods sold. Above given is sales less purchase, it is wrong. Cost of goods sold less expenses, it is wrong. Sales less total expenses, wrong. So GP you find out with the formula sales less cost of goods sold. And next one, which of the following is correct about net profit? About net profit, which of the following is correct about the net profit? You should read statement carefully. So net profit, first point is given, it decreases capital. How net profit will decrease capital? See, if there is profit, it is added to capital. Net profit is added to capital. So how it will decrease? Second one, it has no impact, it is also wrong. Fourth one, capital depends on net profit, it is also wrong. Capital does not depend totally on net profit, there are also other things to consider, right? Like drawing, additional capital. So point number 3 seems correct. Which of the following is correct about net profit? So it increases capital. Net profit increases capital. Point number 12. What is the formula? What is the formula for net profit? Net profit. So this we have seen in income statement. Net profit is calculated by sales less cost of goods sold less expenses, and if any other income is there, it is added. So here options are given like sales less cost of goods sold, it is wrong because with this formula we get gross profit, not net profit. Then cost of goods sold less expenses, it is also wrong. C, sales less cost of goods sold less expenses, it is also wrong because in the after deducting expenses we also add other income like commission received, discount received. So the answer is D. Point number 13. Which of the following shows the financial position of a business? Which of the following shows financial position of a business? So here it's very easy. Point number 13. So answer is statement of financial position. It shows the financial position of a business. So here other options are given. In that one option is trial balance. Now you know trial balance means what? It is just a list of debit and credit balances of accounts extracted from the ledger to check the arithmetical accuracy of double entry. Cash book, it is a ledger account. Income statement, it is prepared to find out profit or loss. So answer should be statement of financial position, which shows the financial position of a business in the form of assets, liabilities and capital. Point number 14. Anything of value that is owned by a business and helps in generating income. So here options are given, you can see on the screen. So what will be the answer? So answer you can see here, it is B, non-current asset. Answer is B, non-current asset. See, asset means what? They are possession of the business. It may be non-current asset and may be current asset. So non-current assets are assets like they can stay in business for a long time. They are acquired to be used in the business. They are not bought with the main purpose of resale, but they help in generating income like machinery, building, land. Okay. Here other options are given. Liability, of course not. Goods not. Services not. So answer is non-current asset. Point number 15. Which of the following is not a current asset? Which of the following is not a current asset? So answers are given: stock, machinery, debtors and bank. See, current asset means assets which are likely to be converted into cash before the end of the current year. For example, stock, debtors, cash at bank, cash in hand. Okay, current assets are expected to be realized in the business normal operating cycle. They are held for the purpose of trading and dues settled within 12 months. So here you can see stock, debtors, bank, they are current asset, but only one, that is machinery, it is non-current asset, or we call it as fixed asset. Next one, point number 16. Which of the following is a current liability? See, liability means what? They are claim against the assets of a business. Liability means business owes something to third party. Amount is payable to third party. Okay. Now here it is given current liability. Which of the following is current liability? See, there are two types of liability. Non-current liabilities means liabilities which do not become due for payment in 1 year and which do not require current asset for their payment. For example, long-term loan from the business. They do not become due for payment in 1 year. And current liabilities, these are debts which are expected to be paid by the business within 1 year. For example, creditors, bank overdraft. Okay, so here answer is bank overdraft. Point number 17, non-current assets have. Non-current assets have, so answer is short life. Okay, non-current assets have short life. It is not like no life or long life, but short life. Answer is A. And current assets have long life, like machinery, land and building. Point number 18. If there are non-current liabilities, if there are no non-current liabilities, then net asset is equal to. So see, if there are no non-current liability, then net asset is equal to assets less only current liability. So answer is A. If there are no non-current liability, net asset will be assets less current liabilities. Point number 19. Which of the following best describes non-current assets? Okay, best describes non-current assets. So non-current assets means assets which are having long life. Okay, they stay in business for a long time. They are not bought for the purpose of resell. So here what is given? Best describe non-current asset. So you can see here, considering the option number C is correct. Which of the following best describe non-current assets? So they are not bought for resell and are used for many years. See, other options are given, like they are not cheap. Their form keeps changing. D are items which do not wear out. Do not wear out means do not depreciate, but we see that fixed asset, non-current, or we can say non-current asset, they depreciates with the time. There is a gradual decrease in the value of that asset. So the answer is not bought for resale. We are considering best answer. So it is C. They are not bought for resale and are used for many years. Point number 20. Cash in hand. Cash in hand is an example of. So cash in hand is an example of current asset. 21. Which of the following statement is prepared as at a particular date? So answer is B. Statement of financial position. Okay, it is prepared as at a particular date. An income statement is prepared as for the year ended. So answer is statement of financial position. 22. net profit is added to. So we have seen above that net profit is added to capital. How it will be added to drawing or gross profit or income? They are wrong. We add net profit in statement of financial position under the heading capital. We add it in the capital, because if there is net profit, there will be increase in the amount of capital. Point number 23. The cash or goods taken out of the business for private uses are known as drawing. Okay, cash or goods taken for business for private or personal use is known as drawing. Point number 24. Dash may be calculated as follows: stock at start, that means opening stock, plus stock at close, that is closing stock, divided by 2, means we are taking average of opening stock and closing stock. Okay, we are dividing by 2, so it is obviously answer is average stock. Average stock means opening stock plus closing stock divided by 2. Point number 25. Dash is excess of gross profit over expenses. Gross profit over expenses means, for example, suppose gross profit is 10,000 and expenses is only 8,000. So gross profit is more than expenses, so that 2,000 is considered as net profit. So answer is net profit. 26. Closing stock can be defined as, so here you can see option closing stock means stock which is remained at the end. Here options are given like cash and credit purchase, no. Purchase minus total sales, no. Purchase which include carriage inward, no. So closing stock means unsold goods, goods which is not sold at the end of the accounting period. Unsold goods available at the end of the accounting period is known as closing stock. So students, 26 transaction we have seen, still we will see many transactions. So here at this point, if you like the video, please like it. You can subscribe to this channel, you can comment for any topic you think I to make the video on it. You can share this video with your friends. Thank you. Point number 27. Which of the following should not be called as purchases? Should not be called as purchases. So answer is office stationery. Considering other options given, like number 1, A is given item bought for prime purpose of resale. See, if goods are purchased for resale, it is considered as purchases. What is given in the transaction over here, that which of the following should not be called as purchases? Goods bought on credit, it is also purchases. Whether goods bought for cash, it is also purchases. See, purchase include both cash purchase as well as credit purchase, but it does not include purchase, credit purchase, or purchase, cash purchase, or of stationery or any asset that is non-current asset. So office stationery, which of the following should not be called purchases? So purchase of office stationery should not be called as purchases. So point number 28, which of the following is a liability? So liability, as I told you, that liability means if the business owes some amount to third party, so it is known as liability. Assets means property of the business. So cash balance of course it is not liability. Debtors means if you are like selling goods to any customer on credit, so amount is receivable from that customer, they are known as debtors. So if amount is receivable from them, they become your asset. Debtor is your non-current asset. Plant and machinery, it is also property, right? It is also one of the property, non-current asset. Plant and machinery is non-current asset. Debtors is current asset. Plant and machinery is non-current asset. So here our question is, which of the following is liability? Now this cash balance, debtors, plant and machinery, as they comes under asset. Now the other two options we can see. Loan given to Salman. See point number E, loan given to Salman. If we are paying loan to someone, of course they become your asset. Amount is receivable from them, so it is also asset. Now the last option is given B, loan from Amir. Loan taken from Amir. So if we are taking loan from someone, so we become liable to pay that loan amount in future to them. So they become our liability. So loan from Amir is liability. Answer is B. Point number 29. You can see, which of the following should not be called as sales? Should not be called as sales. See, sales means what? It is income, of course, from sale of goods and services, and it includes both cash sales and credit sales. So remember always, sales means sale of goods, not asset. Sale of goods, and that is also include both cash sale and credit sale. Now here it is given, which of the following should not be called as sales. So answer A is correct. Option number A is correct. That sale of machinery not now required. See that this is given not now required just to confuse. Considering the first half of the option also, you should understand what is correct answer, that it is sale of machinery given. Sale of machinery means sale of any non-current asset. So it is not considered as sales. Now we will also see other options. B, goods sold to be paid for in 1 month's time. It is sales. Goods sold, cash being received immediately, that is cash sales. It is also sales. Item previously included in purchase and now sold on credit, means it is credit sale. So it is also sales. So now what is given which should not be considered as sale? So answer is A, sale of machinery should not be called as sales. Point number 30. Dash stands in the name of real things such as machinery, building, furniture, motor car, etc. Okay, so considering option, it is very easy. Non-current asset, or we call it as fixed asset. Say asset, non-current asset means assets. These are assets or possessions of long life, for example building, machinery, motor car, fixture, fitting. They can stay in business for a long time, more than one accounting period, and they are not bought with the main purpose of resale. So they are real things like machinery, building, furniture. 31. Dash is a person who owes money to a business for goods or services supplied to him. So answer is A, debtors. Debtors are the person to whom goods are sold, supplied, and they owe money to the business. Okay? Creditors are the one from whom business is buying someone and business owes some money to them. So answer is A, debtors. 32. Dash is a person, 32. Dash is cost of buying goods. Dash is cost of buying goods. So answer is A. Remember students, don't make mistake in this. Carriage inward is the cost of buying goods. Answer is A. See, carriage inward, or we call it as carriage on purchases or cost of buying goods. This is the cost of transporting goods into the business. Carriage inward increases the cost of goods purchased. That's why we add it in the purchases. It is always added to cost of purchase in income statement because it is like direct expenses. And carriage outward, or we call it as carriage on sales. See, carriage outward is the cost of transporting goods to the customer's premises. It is not part of selling price of our goods. Carriage outward is always entered in the income statement as a normal expense and never included in the calculation of gross profit. Okay, so remember this difference. Carriage inward means carriage on purchases, carriage outward means carriage on sales. 33. You can see here on the screen, why do we prepare statement of financial position or balance sheet? So it is prepared to show the financial position of a business. Other answers are given like to calculate profit or loss. No. For that we prepare income statement. B is given to show debtors and creditors. So not only we are showing debtors and creditors, but we are showing all assets, all liabilities and capital. So answer C is correct. We prepare SFP, statement of financial position, to show the financial position of a business. Point number 34. Properties which are held in the business for a long time are called. So now this is, you know very well, we saw above, for the long time the properties which are held in the business are called as fixed asset or non-current asset. Okay. See, I am not reading each time other options, otherwise length of the video will be more. Okay. So you can just pause, you can just consider, read other options as well for better understanding. Which of the following is correct? 35. Which of the following is correct? So answer is D, that profit increases capital. This is correct. Other is given like profit reduce capital. No. Profit does not change capital. No. Capital can only come from profit. No. So answer is profit increases capital. In income statement, written inward should be, see, written inward means sales written. Okay. So sales written we deduct from sales, so that we will go get amount of the net sales. So in income statement, written inward is deducted from sales. 37. Transport cost of the goods to the customers. Just we have seen this, that transport cost for the goods to the customers is known as carriage outward or carriage on sales. This is the cost of transporting goods to the customer's premises. Okay. 38. Written inward deals with. Written inward deals with. So answer is D, return to the firm by its, see there is one word missing, by its customers. Okay, so written inward deals with the goods which are returned to the firm by its customer. Other options are given like purchase on credit. No. Returned by the firm to the supplier. No. That is known as return outward. Return to the customer by the firm, means goods are sent to the customer by the business. No. But return inward means goods are returned to the firm by its customers. 39. Cash or goods taken out of the business for private use. So when goods or cash is taken for the private use, it is known as drawing. Answer is drawing. Point number 40. The excess of sales over cost of goods sold. So if the sales is more than the cost of goods sold, it is known as gross profit. Point number 41. Properties held in the business for a long time. For the long time, if properties are held in the business, it is known as fixed asset or non-current asset. Point number 42. Value of closing stock is found by. See students, to calculate cost of goods sold, business needs to find the value of the stock, right, of unsold goods, that is closing stock. Now this cannot be discovered by just looking at the bookkeeping records. How we will come to know just looking to record that how much goods are left unsold? So the only way is by stock taking after the business of the last year. By stock taking is meant that making a list, just making a list of all the unsold goods and then finding out their value. So the value of the closing stock is found by, here answer is doing stock taking. Okay. 43. The descending order in which current assets should be shown in the balance sheet. See, there is some specific way to show assets in the balance sheet. So asset listed from most assets listed from most difficult to turn into cash, progressing to the assets which is least permanent or easiest to turn into cash. So that descending order we can see here, it will be D, stock, debtors, bank and cash. So here assets we are listing for most difficult to turn into cash. So stock is most difficult to turn into cash, then debtors, then bank, and the cash itself is cash. So it is known as descending order for current asset and balance sheet, or we call it as statement of financial position. So answer is stock, debtors, bank and cash. Next one, 44. Which of the following is a liability? So you can see here cash is asset, it is not liability, debtors is asset, building is asset. If we are giving loan to someone, it become asset, amount is receivable from them. But loan from Peter, if business has taken loan from someone, so business is liable to pay that amount to him. So it becomes liability. So answer is loan from Peter. 45. Which of the following statement is incorrect? Means it is wrong, it is incorrect. See student, you can just pause the video, see option and just see what you feel correct answer and then check the answer. Which of the following statement is incorrect? So here answer is profit is another word for capital. It is totally wrong. Say other option we can see, drawing decreases capital. Yes, it is correct. Profit increases capital. Yes, it is correct. Loss decreases capital. Correct. Drawing are deducted from capital. Correct. So which statement is incorrect? That profit is another word for capital. Point number 46. The cost of goods sold is ascertained as. Cost of goods sold is ascertained as. So this you know now, I guess. So the answer is opening stock plus net purchase less closing stock. Opening stock plus net purchase less closing stock. So we get cost of goods sold. Now here net purchase means purchase plus direct expenses less return outward. Direct expenses like direct wages, warehouse wages or carriage inward. 47. Which of the following should not be called as sales? Should not be called as sales. So answer is sale of unwanted furniture. It is not sell. See, sales means sale of goods. You have to, okay. So other options are given like sale of goods on credit. Yes, it is sell. Cash sale, it is also sell. Sale of goods to Sonu is sell. Clearance sale is sell. So sale of unwanted furniture, it should not be considered as sales. Point number 48. The value of stock on hand at the end of financial year found by. So it is found by stock taking. We have seen this before. Stock taking. 49. The two types of discounts are So the two types of discount are cash discount and trade discount. Point number 50. Capital expenditure is, it is the money spent on buying fixed asset or adding value to them. So answer is C. Capital expenditure means whatever money spent on buying fixed asset or adding value to them. See student, there is separate video where I have explained capital expenditure and revenue expenditure. I can post I will post link in description. If you wish, you can find out for more explanation for the same. 51. From the point of view of your business, which of the following is a liability? So here if you see options, you will find two answers on it. If a car is brought on credit, it is liability. And bank overdraft, if amount is withdrawn more than the amount in the bank balance, so it is known as liability. See, if a house is brought by cash, cash received from a debtor, check given, it is not liability. 52. Which of the following is not a factor that may cause capital to change? So here, purchases. See, other point, if you see additional investment, there is increase in capital, profit increases capital, drawing we reduce from capital, loss we reduce from capital. Okay, so answer is purchases. 53. Which of the following statement describes non-current asset? Non-current assets. So items having a long life and which are bought for resale are known as non-current asset, such as machinery, furniture. Point number 54. The sales return should be. See, sales return means return inward. Okay, it should be deducted from sales. We are not adding it to sales. We are not deducting from purchases. Okay, answer is deducted from sales. Point number 55. Working capital. See, working capital means current assets minus current liability. That is excess of current assets over current liabilities. Point number 56. What is meant by the term revenue expenditure? See, revenue expenditure is the cost of running the business on day-to-day basis. Like, you can see electricity bill paid, rent paid. Okay, they are known as the cost of running the business on day-to-day basis. They are revenue expenditure. Another name for debtors is, what is the another name for debtors? It is account receivable. Okay, it is account receivable. Next, another name for carriage inward, it is carriage on purchases. Carriage on purchases. So that's it students. Subscribe the channel for more updates and share this video with your friends. Thank you. Have a good day.